Hey, my name's James Nicholson and welcome to my YouTube channel. In this video, I want to do something that I've been doing monthly recently, and that's give you my interest rate predictions. Where do I think interest rates are going to be short term? And let's look out a little bit longer term. Now, we're going to go back to this on a monthly basis because things change a lot. There's so much volatility in the market. Maybe inflation is going to come back stronger than ever. That's what some people are predicting may happen at the end of the year. Maybe we go into a huge recession, and then that means interest rates could get cut quicker in order to fight our way out of that. So if inflation goes up, we've got the risk of interest rates going up. If a huge recession happens, because we're technically in a recession right now, but if a big recession happens, then they might cut interest rates in order to get us out of that recession and stimulate the economy. So we're going to go into that and more. Now, if you haven't done already, do make sure you subscribe to the channel over there and hit the bell notification. We've got new content every single day on what's going on in the property market. We talk about legislation, interest rates, house prices, and lots more besides that. So do subscribe so you don't miss out on that. And smash the like button or tickle the like button. Do something to the like button over there. That really helps with the YouTube algorithm, helps us get more views on the channel and grows the channel. We're trying to get 5 million views this year and 50,000 subscribers. So give us a little hand by smashing that like button over there. So, interest rates. Well, they went up 14 times in a row. Now they've been held 3 or 4 times. I can't remember how many times they've been held now. And we're hoping the interest rates are going to start coming down. At least the Bank of England base rate will start to come down. So what happened was the rates went up in order to try and curb inflation. Inflation has come down massively from 11% to 3.4%. And we're hoping we're going to be close to the 2% target this month. In a couple of weeks, we'll get the data on that. And so that's what we've got to look at to predict interest rates going forward. Now, with regards to you picking a rate for yourself, you should always get financial advice. I would speak to a broker. I'm not a qualified broker. This is just my thoughts on what's happening in the market because you guys asked me for this kind of video. But always get financial advice from a mortgage broker when you're looking to your financial circumstances, because I just don't know what they are. So what is going on? Well, initially when the year started, the analysts were expecting that this year, the interest rate at the Bank of England would drop to 3.75. And so that is where we were hoping things were going to go this year. And so that was the prediction. But things changed. What changed was inflation was far more sticky than we were expecting. Then we got the problems in the Red Sea, and that temporarily put some energy prices up. It meant that, look, things are going to be a little bit more difficult, a little longer for a lot of people. We've got the war in, obviously, Ukraine. We've got the war in Gaza as well. These things are contributing to unstable times, and obviously for the people involved in those, it's a lot worse than that. But just to keep it back to rates on this video, this will give us a little bit more volatility. So the predictions and the forecasts have been revised. So where are they at today? This is the Bank of England base rate I'm talking about, not the mortgage rate that you can get. I'm going to go into that as well in this video. So now the prediction is that by the end of this year, by Christmas this year, you'll have a base rate of 4.5% by the end of this year. Now, we're at 5.25%, so that would mean around 3 cuts this year. Now, the first cut was at one stage was going to be as early as March. Obviously, that's come and gone. Then it went to May, and that was pretty much nailed on. A lot of people forecast that. But then we had some inflation data, and inflation stuck at 4% for like 2 consecutive months. That didn't help us at all. So now the consensus is that rates will drop in June. Now, we've also got to look across the pond to America, and our interest rates are very close to the Americans. And what's likely to happen is that we will follow the Fed. And that's the term that a lot of people use. And so when the Federal Reserve start dropping interest rates, that is when we will start to look doing the same. And so the Federal Reserve are more open about it. They say, look, rates are going to drop this year. The Bank of England, they're more along the lines of, look, we will not let you know when we're ready. We will drop interest rates. They'd like to keep stuff a little bit more tight-lipped. But the Federal Reserve are saying we are going to drop interest rates this year. And inflation is doing pretty good in America. It's had a bit of a blip more recently, but it is trending downwards again now. And so if they drop their rate in June, there's a good chance that we will drop our rate as well. And they normally have their interest rate meeting a day or two before ours. So that's very, very important. Next is obviously the inflation data is going to be the big one here. So inflation is expected to get close to the 2% target in the next couple of weeks, which is great. But the Bank of England and lots of people are saying at the back end of this year, inflation could start rising again. And that's mostly on energy prices. And so that's pretty crazy how that's looking. But energy is fairly cheap at the moment, or cheaper. For example, I have just done the energy contract for my business here, and it was 80 pence a kilowatt hour we were paying over the last year or so, which is crazy high. And we got it down to 22 pence now with British Gas. So that's a big drop. Maybe I could have done a better deal, but that is still significantly lower than it has been. Now, what do we base rates going forward on? Well, the biggest thing is something called the swap rate, right? And so swap rates are the rates that other banks borrow at, right? So a big bank, or you might think it's a big bank, and I do, NatWest will go to a bigger bank. They will borrow a ton of money from them, maybe $1 billion or 100 million, and they will get it at a fixed rate at that time. And that's why you can see some of the deals that come on the market can be short term. So you'll get some lenders that will borrow maybe 100 million. They'll lend that out. They'll take that 100 million and they'll do a great deal, a great offer, get some loads of publicity and PR, but maybe they've only got 100 million allocated at that rate. Then the rate will go up after that money is gone. Now, the swap rates at the moment are way better than they were last year. They've had a little bit of a drop more recently. And so the 5-year rate at the moment is at 3.91 and the 2-year rate is at 4.48. So your bank will borrow at that. Your bank will borrow at that. So you can get a 5. So if you look at that, that effectively tells us 5-year deals are going to be cheaper at the moment. And that is what we're seeing with a lot of lenders. So for a 5-year rate, that you will see they might charge that out and sell that out at like 4.5%. So that's their little margin on top plus fees, right? And that's how the bank will make money. Now, where do we think interest rates are going? Or more importantly, mortgage rates, should I say? Well, I think that in the next 2 to 3 months, you're going to see pretty much a flat market. It really depends on how much that inflation drops. I think the best case scenario on the deals that you'll see out there, I think you could probably see about 0.25% knocked off the rates that you can see today at best. I don't think you're just going to start seeing 0.5%, 1%. I think that the best rates will be close to 4%. And I think that's where you're going to really get the best deals. So I don't think it's worth waiting. If you're coming out of a deal now, I don't feel it's worth waiting thinking rates are going to drop significantly, because that's just not what's going to happen. At the end of the year, when we get the base rate down here, is that going to get passed on to you? Well, I think that the best rates that you'll see in 2024, and this will change as things change, but right now, I predict that the best rates that you'll get by the end of 2024 that you can borrow from is around 3.5% plus fees. There are deals close to that now, so it's not a massive shift downwards. I don't think you're going to see anything below 3%. I don't think you're going to see anything close to that. You're definitely not going to see 2% and 1%. There are some ways that people have manipulated rates to get that. I've done some videos on that last week. But I think if you're holding out for a huge drop in rates, it's just not coming this year. I just don't see that coming this year. So that's where my predictions are right now. It might be totally different next month. If inflation dropped to 1% and the Fed start dropping rates earlier than expected, that could make a big difference. So do subscribe to know what's going on. We also do a weekly video on the best mortgage rates this week. That's really worth knowing. We talk about buy-to-lets, HMOs, residential mortgages, and much more. So do check out for that. Do subscribe, hit the bell, share the video, and go and check out some more content on my channel, including this video right here.